Hello, everybody, and welcome. Today with me, there is Joohee An from Mirae Asset. Joohee is a senior portfolio manager and a specialist for Asian consumption. Welcome, Joohee.
Thank you. Hi, Thomas. Thank you very much for having me today.
So, Joohee, today we want to talk about current trends in Asian consumption. So, Asian middle class development of consumption is not new as an investment topic. How does COVID-19 pandemic currently influence consumption in Asia?
I believe that this mega trend of Asia consumption growth is not going to be materially changed because of this pandemic, although we are temporarily seeing consumption slow down. First, the overall consumption penetration is still very low in emerging Asia, and consumers are switching to a bit different area or different format of consumption, like online. But there are still various new sectors consumers would spend more on. And secondly, the governments are also expected to try harder to boost consumption with more effective and also efficient measures and policies in order to offset negative impact from weaker external demand. So I think this mega trend is still continue to offer a great the investment ideas and opportunities.
What are the main drivers for Asian consumption, and where do you currently find investment opportunities in Asia?
Just like you mentioned earlier, actually there are a lot of common drivers which can be found in most of emerging Asia countries, such as urbanization, income growth, younger population, and technology development, etc. However, from equity investors' perspective, more important drivers are different in each country. So for example, we think technology development is more important to drive the new consumption growth in China. But in India, for example, the urbanization trend is a more meaningful driver in India because it is creating huge number of new consuming class in the country. So, for example, in our fund, the top two countries are China and India. So for China, we see more investment opportunities in sectors or companies that benefit from this new technology development. But in India, necessity products like FMCG products or healthcare related ones are still very much underpenetrated. So we are going to see structural and steady growth in the long term, driven by this leading national brands.
We have seen there's a high concentration of Chinese and India stocks in your portfolio. Why is it so? And what about Southeast Asia, for example? They are also growing very fast. Do you find their investment opportunities too?
Yeah, well, compared to benchmark, we also have overweight position in emerging ASEAN countries, such as even Vietnam, Philippines, and Indonesia. But first, the population difference is really big. So China is 1.4 billion and India is 1.3 billion population. That's huge. So although we see quite big numbers of market cap or even market size in some specific sectors, but still that's because of the big volume, which is big population, not because of the high penetration. So in China and India, still penetration is very low. And if you consider the huge volume of the market, then still it has a long way to go to see until the saturation point. So from equity investors' perspective, we can see more attractive companies which are going to be delivering more structurally, more steady, higher earnings growth going forward.
So tourism is one of the mega trends you also mentioned in one of your presentations. But of course, we know that tourism is hit hard by COVID-19 in countries like Thailand, for example, which are still locked down. So how did you change your portfolio strategy in terms of tourism stocks during the last couple of months?
I agree that the outbound tourism still they're struggling. And also, I think it's going to take a much longer time to see the meaningful recovery, because it depends on when we can see stabilization of this pandemic in other countries, including Europe or the US as well. But still, people want to travel. They want to move around. So that's why in China, for example, we have more domestic tourism related names instead of outbound tourism. So China is more stabilized than the other countries in terms of the pandemic situation. So the domestic tourism recovery was actually faster than expected. And also government supports this, because of this tourism sector is a very good tool to boost overall consumption. So the government relaxation on duty-free industry will benefit duty-free the operators in Hainan. Hainan is a special economic zone in South China, so they can actually travel travel to their own islands, but they can buy duty-free items. And also, from actually today, the restrictions on Macau travel just got relaxed. So the quarantine measures between Guangdong and Macau, it got lifted from today, effective from today. So we believe the outbound tourism, again, it had still more uncertainty and needs more time to see meaningful recovery. But we want to invest in domestic tourism like names.
So many actively managed Asian strategies have a high stake in Chinese technology stocks in their portfolios, and we have seen they have performed very well during the crisis, but also the valuations have sharply risen. What do you think about current valuation levels of Chinese technology stocks?
For sure, they outperform the market meaningfully, but I think we can think about two factors. One, they got re-rated, but it can be justified by better than expected earnings going forward. So that re-rating part. And the second part is what kind of a new consumption created by this COVID-19 can support this upgrade of earnings growth going forward. So I think the first, the re-rating part, these kind of companies, they deserve more premium compared to before COVID-19, because now they show much more resilience or even better earnings compared to the other sectors. And secondly, kind of a new consumption is being created by two factors. One, actually new consumers who didn't really use online services or products before, they started to use. So they just got bored. So because they had no options, right? Otherwise, so that's why the new consumption will be created by these new consumers. And secondly, the governments, they are actually trying to build new infrastructure, which is backed by this new technology. So for example, like online healthcare sector, we saw very meaningful relaxation on regulation. So now we are seeing also emergence of online the education sector as well. So a lot of kind of new sectors is being driven by new consumers' behaviors and also the government supports. So I think at this moment, they deserve the premium, but also it's not just premium. I think that kind of premium can be justified by better than expected earnings going forward.
So this was Joohee An from Mirae Asset. Thank you very much for being with us today, Joohee, and sharing your views.
Thank you very much.